Hello, this is the third video for the day. The last one was this tungsten field gold bars, my genuine confusion. And before that, there is a silver turbo update. So this is an oil video. But before that, I'd like to thanks for the comments, which has greatly helped. And well, when you're just going through the comments, you could use a micrometer and get the actual dimension of either a certified gold bar or right from the mint itself. I understand the confusion of material density coming into play, but because these bars are clad, the gold covering is where the true manipulation occurs. Mathematical formula for the correct ratio of tungsten/gold to produce those bars in proper dimension is mind-boggling to me, but doable nonetheless. And that's the math that's mind-boggling me for the last little while. And I guess it is more confusing, as I was figuring it to be as well. Anyway, let's go on to some oil, because I haven't done an oil video in quite some time, and not much has changed, but there's a couple key things, because I did confirm that it's going back to 150, and the confirmation's still in play with concern as of this stage, which we'll go over, but I just want to see how easy it is to search how long would it take for my video to come up. Yeah, it looks like FX Empire's got the oil monopoly on the YouTube search. Maybe I'll spell analyst right, but it's not going to make a difference. It's going to be the exact same. Yep. Let's type my name in now. And I want to do 2012 because I know I did a video on about March. Hey, there we are. February 26th is when I did it. So we'll go over it, and then what we'll do from there is now this is what I like about YouTube, and I hope it's not working. Of course, what I like about it is in a lot of videos, I guess my video back then didn't work. You could just highlight this and it'll give you a small image of what you're looking for, so it's so much easier to browse through it. But here we have a chart, which we have this high, this low, and at the time, it had resistance here, broke down below here, there's the breakout. Now you find some support. It appears below, but that's fine. And it's lifted off from this point with key level at 82.67. So obviously a clear break above this level is what you are looking for this to really break out. And then of course the key level is to hold above 83.22. Those are more along the lines, the things that I would have said. I'm still interested to see if I got the exact same number, because I got it from the same site. Oh, it's penny off, same thing. 82.66. So here we go again. This is the oil chart. So obviously I last left off somewhere around here. Well, notice what has happened since that point. It has made a lower high from the previous high. And it has made barely, but pretty much a match, a higher low from the previous low. So the two things that I was just stating, that it needs to have the clear break above, well, it hasn't even had that break above, let alone the clear one. And two, a break below this, well, A, it hasn't had a break below the previous low, nor a clear one again. So every single time that you make a pattern of lower highs and higher lows, you'll always grab some form of symmetrical triangle. And this one's a very big one. Based on the analysis within this, you had your massive crash, which shows that large moves are available within this particular market. So you have to expect the possibility of a match of this, maybe intensity a little less or even a little greater, to come pretty much at any time. But you're also looking for situations where it may happen. And the way I'm looking at this is the clear breakout above or the clear breakdown below does have a decent chance of having those higher volatile moves of taking place. And when you're in this type of range and you look for time duration of such, Well, there's definitely reason to state there could be a lot more of what some people would call a bunch of sideways nonsense or choppy action, however you want to play it, because the pattern within the 18 average is getting above it, below it, above it, below it. Now we'll see if it either goes a bit above it, excuse me, and goes below, or even if it maybe just stays within the band, goes a little bit underneath it, and does the same old stuff. As long as it stays within that range of the high of a, I need straighter lines than that. So let's just do it this way. So a high of about 113, 114, and a low of about 75. So as long as it stays in that range, it's going to stay in that choppy action. As far as next targets are concerned, on the break above this level, I'd be looking for the previous high of a little above 145, a little below 150. As far as a break of this, my first level would be, sorry about that, a break of, or a breakdown to this level here, if you break below here, which is at 58, again as the next level, because if the resistance level is the next one and it breaks through, then you're going into uncharted territories, making another leg higher. And there are methods of figuring out where resistance can be found, both on the way there and long term. We're not going to get into that, at least until it at least reaches those areas. And then the same again here. If this level doesn't hold, well, now you got the previous low, and what would be the 23.6% variant, so somewhere around here. But even another method is doing maybe something like this. You take the length of the top and this resistance, so maybe in around 43 if it breaks below, of course, this level. Just different methods that can be used in trying to determine where the direction should stop if something particular happens. But again, it's still in a neutral market. There's another trend line. So there's a even larger symmetrical triangle that also has more room to move until, of course, this comes to a completion. Okay, and if you look at time, I mean, you can do, what, another 7, 8, 9, 10 candles before it gets to here? Eight times, well, it doesn't say 12 down here. If the updated version will have it, it's a 12-day chart, actually, so I should be pointing that out. But it is going back to 208. So 12 times 6, that's about, well, you can say about 60, 70 days until this pattern pretty much closes off. And, well, that's a good 3 months or so, 4 months. That could take us into 2013. It's unlikely that it will extend that long, but it just shows you that if it stays within that range, that's the amount of time that is left within it. You also got these bands. I want to talk more about the direction of them because I was going to do a video on it today. I'm not going to, but I'll talk briefly about it. If the bands are both going up, it's an uptrend. If they're going down, it's a downtrend. Then you got situations where one's going up and one's going straight. Upward bias, that would be neutral with an upward bias. And then if this is straight and this is down, then that's neutral with a downwards bias. And then if you got pretty much straight on both sides, that's neutral. If you got up and down moves, then that is volatility, which we'll get into later on. But what we see here is this went straight up and down. So overall, it's pretty much sideways. This is still a little bit in an uptrend. So for now, I'm calling this neutrality with an upward bias. If the bottom band, like a Bollinger Band, really goes flat for a decent amount, then I'll just go neutral on it as well. And again, that's somewhat irrelevant anyway, because it's all going to come down to the trend lines as well as the key Fibonacci levels, which of course, and support resistance, 75, 115-ish, and of course the key level at 82 and 2/3. So thank you for tuning in and have yourself a great day.